crypto, and obviously the rise of the institution, as I call it, the wall of money. I mean, that's a huge story that people didn't really believe it was going to happen, and now everyone's trying to get used to the fact that the rules have changed, and they're not really happy about it.
Yeah, here's my opinion here. The smartest, wealthiest people I know got rich and stayed rich with a simple strategy. You create or you buy assets that are high quality, pristine assets. You hold them forever, and when you need cash to live, you finance them, you borrow against them. Like I buy a football team and I hold it forever, and I borrow, and I have a good banking relationship with a bank, and they loan me money at 3% or 2% interest. I buy a city block in New York City, I hold it 100 years. And then if the Fed prints 10% more money or 5% more money, the building goes up 5% in value if it's truly desirable. If you have assets that are scarce, desirable, and unimpaired, they're not impaired. I use that criteria, right? Because like for 100 years, it was New York City real estate, and maybe New York's not the greatest bet this year. But football franchises, city blocks, if I had an unimpaired, Jeff Bezos held Amazon stock, Mark Zuckerberg held Facebook stock. So buy Bitcoin. Am I going to sell it? No. I'm never going to sell it. I'm never going to. Here's two things I don't want. I never want a capital gain tax, and I never want an income tax, right? Okay.
Of course.
So what's the problem? If I buy an asset and then I'm trading on it and generating yield, I could generate 30% yield, but then I owe 15%, I owe tax on it, right? So if I had $100 million and I trade it, I'm taking a lot of risk. I generate $30 million in yield. I pay $15 million in tax. I have $15 million after tax, and I'm trading it, and I've got all this execution risk.
Right.
If I hold $100 million and Bitcoin goes up, you fill in what you think it'll go up. It's been going up 200%, but if it went up 20%, the number wouldn't, if it was 5%, the answer wouldn't be different. Let's say it goes up by, it doubles a few times. Well, if it goes up 20% a year, every year, if I need money, I set up a relationship with a bank. And there are companies, some of the new emerging crypto exchanges will give you a loan. NYDIG will give you a loan. Genesis will give you a loan. Eventually, you'll see loans coming from lots of banks, and the entire Bitcoin banking sector will develop. So take your $100 million, borrow $10 million, pay. Right now it'd be 5% interest. It wouldn't be 50 basis points because the sector isn't as competitive as in stocks. If I had $100 million of Apple stock, I could borrow at LIBOR plus 50 basis points, right? I could borrow $10 million and pay less than 1% interest on it. So right. I would just, and if I told you the stock was going to go up 10% a year, you would just hold it forever.
Yep.
So why do I sell an asset? I sell it because it's impaired. If you have a company, it's impaired by a bad CEO. It's impaired by a bad product release. It's impaired because a regulator makes it illegal. If I have $100 million of land in California, why can't I do that? Well, I probably can, except for the fact I might get real estate taxed to death. The governor of California might impair it by passing a zoning law on it, right? If I have land and land gets taxed and it gets impaired, stocks have execution risk. On the other hand, Bitcoin, it doesn't have the property tax risk. It doesn't have the execution risk. There's no new product. It just exists to exist. So the strategy is simple. You buy it and you hold it for 100 years.
Tokens aren't going away. And it's just a matter now of working through what are the real use cases for them. And I think that lay the ground for it. I think DeFi is going to have similar kinds of problems. There's tons of these projects, and I've seen a ton of them that just aren't really DeFi. And there's a bunch of people really working hard on getting it right. And a lot of people won't get it right at first time, but the foundation is being laid. So I think DeFi will be a feature of this rally, and there'll be a lot of projects that fail, but that's okay again, because, and people call them scams and blah, 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 but it's a feature of the nascent part of this space, that this is a whole new thing just developing, and people are trying to throw stuff against the wall and see what sticks. Now, people need to be careful in how they invest in that space, but to watch it, it's truly extraordinary. I'm surprised how few people understand how big this is. I think the space is going, la, 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 I can't hear you, because they don't want to pretend that governments can be involved in the digital space. And then it's like, it's not Bitcoin, and the central banks aren't saying it is either. What they're telling us is that they are going to change the rules of economics. And the shift is going to be towards behavioral economics and away from traditional economics schools of thought. Because when you can give different people different incentive schemes, you've basically reinvented Facebook. But Facebook with money, huge thing. So this is what the central banks are talking about. So not only is it great for Bitcoin because we have digital on-ramps and off-ramps and everything comes easier, but literally everything is going to change. How the dollar plays in the global system, the IMF want to make this part of the narrative too. So we're talking secular, forth-turning, massive shifts that are potentially on the horizon. It won't play out overnight. It's not, well, it could do. Bretton Woods did, and stuff like that. It could play out overnight. I don't think so. I think it's just something that will change, and before you know it, you look back and go, oh my God, the world's entirely different than it used to be. Okay, this is the crucial thing I keep trying to pound the table about, is you don't have monetary policy any longer. It's basically lip service. It doesn't work in Europe. It doesn't work in Japan. It basically just frees up some assets on bank balance sheets. Velocity of money's collapsed. They don't really lend out particularly. They lend to the best creditors, and that's it. And so monetary policy with rates at zero has run its course. The Fed have told you that. The ECB have told you about. They've all said it needs to go to fiscal. And they're bored of telling governments this. Now, governments don't like it, and people don't like it because of deficits. And the MMT is the crowd in the middle of saying it doesn't matter. But either way, there is no choice. You either somehow have to pay back all of this debt and go to austerity, which they tried and it failed, or you have to try the logical conclusion of MMT, which is to give the power of fiscal to central banks and merge the two. It's slightly terrifying, but it also, I think, is going to be incredibly, incredibly exciting in terms of how you can change, I said, economics, how you can manage the economy. It's a really interesting phase because I do think you can do some real good here. We go back to the barbers and the restaurants and the people like that. Right now, it's so blunt trying to be able to do that. But once you do these central bank digital currencies and you have some sort of programmable money attached to it, you can basically do anything. You can say, right, anybody who runs a restaurant that's registered as a restaurant, you're going to get a check for $25,000 and you have to spend it within 3 months or it evaporates, right? That's programmable money. That's astonishingly powerful as a stimulus because you can get people to behave in the way that you want them to behave that does the best good for society as a whole. Obviously, central banks being central banks and governments being governments will always screw it up. But at theory, it's a really powerful idea. It's groundbreaking, I think.